Good day, subscribers. It's me, the finance guy, back with another video today, guys. And today we're going to be talking about what's going on in the market. And a lot of people are thinking, hey, Josh, you just recommended a video the other day about why you think Starbucks is a buy or potentially a buy. Remember that video that I talked about buying when things go down instead of when things go up? Ding, ding, ding. And it's dropped over 12% over the past few days. And you might be thinking to yourself, are you crazy? Like, what kind of investing strategies are you offering here? This is why you should do your own research when it comes to investing, and you never know what's going to happen in the market. The market could be completely irrational. And I've told people this before, and I'll tell them that again, why most people get investing wrong and why I personally think people get investing wrong is because they're greedy when people are greedy, and fearful when people are fearful, when they need to change that around and change their mindset into being greedy when people are fearful and fearful when people are greedy. With that being said, Starbucks took a gigantic dip lately. It hasn't had a dip like this in almost 4 years, I think. So I think a lot of people are like, wow, okay, you know, what kind of investor are you doing when you're recommending videos and the stock seems to take a plummet? With that being said, I'm sorry I couldn't get you guys a video yesterday. I now have social media outlets. I now have an Instagram account. I now have a Twitter link, and that's up in the banner now. I was working on Photoshop yesterday, getting my banner all set up so that I have kind of a more professional looking channel. With that being said, let's jump into it today on what's going on in the market, and a lot of people are just losing their heads. Alright, as we can see, the market's been on a little bit of a decline, and that's going to happen when you have your president say, hey, we're going to be doing trade wars with China and we're going to be slapping a $250 billion tariff on them if they decide to, fight back. And that's never really good for the markets because free trade is usually really good for everyone. So a lot of things have been going down lately, and we've been on a 9-year bull run. I keep telling this to people all the time that you should be weighted heavy in cash, and when you see buying opportunities, maybe you deploy your cash at those points. But if you're buying into a heavy bull market, it's very likely that you could get burned. And this is just the cause and effect. I look for buying opportunities. I look for stocks that are on the decline, and if they have maybe a 10, 12, 20% drop within a few months, then I deploy some of my cash and more cash as time goes by if I believe in the company. But currently we're on a bit of a dip right now. So the market is acting irrational. You have a lot of fluctuation, or maybe you consider it rational because we're going into potentially a trade war. But the thing is, and what I think personally is your long-term perspective on goals and holding shares of good companies for longer periods of time. I see so many people that are so impatient when it comes to the returns. I want a 20% return within a month. Well, if you want a 20% return in a month, you're probably going to have to take excessive risk. And if you're making 20% a month every single month, then man, you're killing the market. Congratulations to you. I hope you can do it for the next 10 to 20 years, and then you can retire a trillionaire. With that being said, I think a lot of people have this mentality that, oh, the stock is going up, I want to buy now and it'll go up, and then they jump in and the stock goes down. And trying to buy something as it goes down is kind of oh, I just bought it and it went down even further, and it's kind of what people feel depressing. It's sad because you purchased at a point and then the stock goes down even further and you're like, oh man, I made a really bad decision purchasing that stock. And I think that that's kind of a poor mentality to have. The reason why I think it's a poor mentality to have is you have to think of your potential gains, on a long-term basis. I can't tell you how many times I went back in history and looked at my mom's purchase of Allstate, and how many times that stock has fluctuated in price during all the 30 years that I've owned the stock. So if you have large potential, swings in the market, there's going to be very strange things that are going to happen from time to time. And sometimes companies are not profitable, or sometimes they're going through a major change, and sometimes it's for the better, and sometimes it's for the worse. But that's why you have a diversified portfolio, and this is also why you have a lot of cash. If you have a lot of cash, and I made a video on why I think cash is king, then you are available to use that money and deploy it as the market goes down, and more so if the market goes down even further. Now, sometimes you can deploy your money at higher amounts if you really think that the stock is going to recover quickly. That's a preference. Or maybe you talk to your financial advisor. I'm not your financial advisor, and this is why I always say make sure you do your own research. If you deploy a lot of money and the stock recovers, you can make a lot of money. But if the stock continues to go down and it takes a long time for it to recover, and you deployed a lot of money at the top, then you have a thimble when you get to the bottom. With that being said, I think you should do your own due diligence when it comes to investing. And to not really pay attention to what's going on kind of a daily basis, but kind of like what's going on by a month-to-month basis, or maybe even a yearly basis. I think so many people are just focused on, how do I get this as quick as possible into the most amount of money and the fastest return? And we become so focused on trying to, do things faster and faster and faster and faster. We don't think about the fundamentals, and it won't be long until we reach a point where the stock market has reached its high point and the market just goes into a free fall, tumble down. Maybe it's over a long period of time, maybe it's really fast. I don't know, and honestly, I don't care. This is why I have cash available to purchase shares of companies that I thoroughly enjoy and I think will do well in the future as time goes on. And that's what I'm trying to teach you here on my channel. I'm trying to teach you guys a different way to look at stocks, a different way to invest, and a different way to save money. To me, I'm so young right now, and I just started investing, that to me, it's a learning experience. This is a great opportunity for me to learn how to become a better investor as time goes on. And if I can weather some of the worst times, then I could become a really good investor in the best times. So I wanted to kind of talk to you guys about that today. Thank you so much for watching. Please subscribe if you haven't subscribed yet. Hit the bell for more notifications. I make videos almost daily. And I also feel free to check out my banner with all my Twitter account is linked up, my Instagram account is linked up to my channel now. So you guys have any questions for me, feel free to hit me up on those social media outlets, and I hope to see you guys again next time. Oh no, my stock is on fire. What do I do? Be patient and invest at the right times.